Welcome back to JJJ Investing. We are ready to give you another video to help explain the AIM system. The AIM system stands for Automatic Investment Management. This is a system that lets you buy low and sell high and use logic and common sense and not emotion, which is the enemy of all investors. AIM is different than many investing methods because you keep 50% of your cash in the portfolio and 50% of your other 50% is for buying leaps. So ideally, if you start off with 10,000 on one stock, you're going to buy 5,000 worth of leaps and 5,000 in cash to buy if the price goes down low enough. You use leaps for bigger profits because they're much more volatile and go with a much higher and lower range than the stock they represent. So always remember, with options, you have to buy a contract, and a contract equals 100 options. But prices are always by the options. So if you see a price of $2.50 on your stockbroker's screen, it means you can buy a contract for $250. Now on to the topic of the day for AIM, and that topic is rebalancing. Because while you're trading with AIM, your cash and leaps can get out of balance. And I have a good example here in a slide I will show you to give you an illustration of when you should rebalance your cash and leaps while you own an option. Later on, we will explain how to rebalance when you roll over your leaps at the end of the year and buy next year's leaps. So first, rebalancing a leap during the middle of the year. I picked IBM as an example. This is a normal rebalancing you would want to do during the year. And here's why it happened. If you look at the slide, you'll see in April 10th, the price of the option was $17.80. Well, they do have volatility. Literally a month later, that option went down to $7.76, more than a 50% drop. Now, we don't want that, because when you look at that, the middle row here, you'll see your leaps value is $5,432, but your cash is $17,393. That's way out of line with a 50-50 ratio. And we make our money buying and selling leaps, not having large cash balances. So this is a great time to rebalance on this stock, especially since IBM is at a very low price right now. So here's what we do. You look across and see your portfolio value is $22,825. Well, then how do you get 50-50? You divide by 2. So if you divide 22,825 by 2, you get roughly $11,413. So that's the amount you say I'm going to buy more contracts with. So that enables you to buy 8 more contracts. As you'll notice in the third row, you go from owning 7 to owning 15. And when you look at the third row, after you've adjusted and rebalanced your leaps in cash, you see you now have 11,640 in leaps value and 11,185 in cash. It's virtually impossible to get a perfect 50-50 ratio most of the time, but you just want it very close. And this is very close. So this is how you should rebalance. And if I'm helping you manage your account, I will point this out to you. And it's explained in my books. that are available for sale, of course, at jjjinvesting.com or bit.ly/your yacht or bit.ly/A, capital I, capital M, for capital MILLIONS. And now I'm going to talk about rebalancing when you roll over to next year's leaps. Every year with AIM, you want to roll over when the New Year's leaps come out. They come out officially roughly September, October, though this year they all came out in September. So maybe they'll follow that pattern again next year. I don't know. But here's what you do. I use an example here on Amazon that's in my wealthy portfolio in my newsletter. Okay, so you see here, looking at the slide here, on December 6th, you own the January 2021 Amazon Leap. Okay? Strike price is irrelevant here for the example, but it would, the January 21 Leaps was $218. You see, you have 1,679,216 of Leaps value and 1,305,880 of cash. So that's pretty good, but still we're going to rebalance. Okay, now we decide to buy a different strike price in 22, and that strike price works out to $314. Now, so we're going to take the 2,985,096, divide by 2, and that enables us to buy 48 contracts for 1,507,200 and leaves us with 1,477,896 in cash. Again, very close to that 50-50 ratio. It really doesn't matter that we now only own 48 contracts instead of 77. That's irrelevant. 48 is plenty to trade with also, and we'll get the benefits of amazing Amazon for years to come, because that's what I would want to keep in your portfolio. So I hope I've explained done a good job of explaining how to rebalance. Of course, if you have any questions, you're always welcome to go to jjjinvesting.com and shoot me a question or two, and I'll be happy to answer it. So until the next video, I'm saying goodbye, and I wish you great luck. And you don't really need luck as much as you need logic to make a life you really want for yourself and your family using AIM. There's nothing like it, and it's good forever. So until we meet again, goodbye from Jeff.